What is up, guys? It's Lynn. Let's talk about the elephant in the room, PayPal. If you look at Fin Twitter or listen to the mainstream narrative right now, PayPal is basically treated like a legacy bank. It's boring, it's slow, and everyone assumes Apple Pay ate their lunch. Currently, the stock is hovering around $63. The PE has compressed to about 12x. It feels like dead money. But, and this is a big but, I've been digging into a sum of the parts valuation that paints a completely different picture. We are looking at a fundamental dislocation between price. My models point to a fair value of $102.18. That is a 62% upside from where we sit today. Today, I'm going to break down exactly how we get to that number, why the market is mispricing Venmo, and why this might be the most asymmetrical risk-reward play for the next 18 months. Let's dive in. Here is why the market is getting this wrong. Most algos and retail investors are looking at PayPal as one giant slowing monolith. But PayPal isn't just a checkout button. It's a holding company for 4 distinct businesses with very different margin profiles and growth trajectories. When you blend them all together, you get a messy average. But when you strip them apart using a sum of the parts analysis, you realize the market is basically giving us the high growth assets for free. Before we get into the buckets, let me be upfront. I didn't spend 40 hours manually crunching spreadsheets in Excel. I'm using AlphaPilot. Think of it as having an institutional-grade equity research analyst sitting on your desktop. It doesn't sleep, it doesn't miss footnotes, and it ingests filings, transcripts, and macro data instantly. For this PayPal thesis, I had AlphaPilot pull in the latest Q3 filings and run 4 independent valuation models to triangulate the SOTP target. It handles the quantitative heavy lifting, so I can focus on the strategy, the narrative, and the part humans are actually good at. All right, backed by the data, let's break down the 4 buckets. Bucket number 1, the core. This is branded checkout, Braintree, and Zettle. This is the cash cow. We're modeling mid-single-digit growth, nothing crazy, with stable EBITDA margins around 25%. Based on a blend of DCF and conservative multiples, this segment alone is worth $68.8 billion. Here's the kicker. PayPal's entire enterprise value today is barely above that. This means if you buy the stock now, you're paying a fair price for just the core and getting Venmo, credit, and everything else for zero. That is what we call a margin of safety. Bucket number 2, Venmo. This is the crown jewel everyone underestimates. Alex Chriss has finally stopped chasing meaningless user growth and shifted to monetization. We're seeing 12 to 18% revenue growth. Margins are expanding as they push pay with Venmo and debit card usage. Even with conservative assumptions, this is a $13 billion asset. And honestly, that's probably low. If they start breaking out Venmo's numbers in earnings, major catalyst. Wall Street will re-rate this thing instantly. Bucket 3, pay later and credit. This is the riskiest part. Capital intensive and the macro is volatile. I'm applying higher discount right here. We're valuing it around $5.5 billion. Bucket 4, international and others like Xoom and Honey. Another $10.7 billion. So the math works, but spreadsheets don't move stock prices. Narratives do. The reason I'm bullish isn't just valuation, it's execution. Since Alex Chriss took over, the growth at all costs era is dead. They're buying back shares, they're focusing on profitable growth. In Q3 2025, branded checkout TPV grew 8%. The moat isn't eroding. Consumers still trust the brand. I'm not a permabull. There are risks. A recession, BNPL, credit losses spike. Apple and Block, strong competitors. But at $63, the market is pricing in a disaster scenario that isn't happening. Bottom line, a resilient core, a hidden growth engine in Venmo, a management team finally aligned with shareholders. My target is $102.18 within 12 to 18 months. I'm accumulating. Drop a comment. Is the market sleeping on Venmo or is PayPal a value trap? Let's debate. Thanks for watching. See you in the next one.